All right, Mr. Chair, you are live.
Okay, thank you. Good morning, everybody. This is the Thursday, March 14th, 2024 regular meeting of the Financial Advisory Commission. We have with us from the commission, myself, Fred Sussman, the chair, Perry Hepworth, Patrick Bannon, uh, uh, Frank Brown, and I am expecting, although he's not on with us yet, Jim Cardillo. As mentioned before we went live, Ed Meehan, who's out of the continental states on vacation, will not be joining us today. And we have with us Jody Dickinson, Vicky Buckland, Julie Donnelly, Ross Arnett, Mike Lyles from the city staff. So that having been said, I sent the agenda out, I believe it was last Friday. Commission members had an opportunity to review the agenda. Any comments, corrections, revisions to the agenda? Hearing none, I'll entertain a motion from Frank Brown to approve the agenda as presented. Accept a second from Patrick Bannon. Any further comments or discussions? Hearing none, all in favor of approving the agenda, raise your right hand. Unanimous, so the agenda is approved. I also sent out minutes of the commission January 11th, 2024 meeting, action minutes. Any corrections or questions or comments about the minutes of the January 11th meeting? Hearing none, I'll entertain a motion from Patrick Bannon to approve the minutes. To entertain a second from Frank Brown. Any other comments or any comments about the minutes of January 11th? Hearing none, all in favor signify by saying, raise your right hand. Frank, don't take your hands off the wheel. Opposed? No. A motion carries unanimously. Reports. First, Finance Department. Jody, anything to report? We'll get to the CAFR later. It'll probably be shortly, but we'll get to it in the regular part of the agenda. But what else, if anything, do you have from the Finance Department?
The typical work. Julie's just put out this ACFR that we're talking about today, so she's trying to catch up with her normal accounting and finance work, and we are putting the budget together, of course, for next year. We're drafting that up. That's taking up a lot of time. And we are also working with the unions on the negotiations. So Vicky and I are involved with that almost daily, trying to get those agreements finalized for this next year. There's a lot of other projects we're working on too, drafting policies and procedures, things like that, we're trying to keep going along with all of our other normal tasks. So that's, we always have vacancies we're trying to fill, although we're hopeful we may be fully staffed in a few weeks here. So that's always a good thing.
It sure is, particularly with all the work that you have going on. Any questions, comments from members of the commission before I ask a question? Seeing none, Jody, let me tell you what's running through my mind, and I am sure we will talk about it sometime over the next couple months. But seeing the dire financial straits that or at least allegedly, that the state is finding itself in terms of revenue shortfalls. Two questions. How are we doing this year from best you can tell? And how are you planning on dealing with potential revenue shortfalls from the state for planning next year's budget?
So for this year, we are doing well. I've done some projections in preparation for the union negotiations and believe that our revenues are going to be at or above the budgeted amounts, and the expenses are again projected to be below our budgeted amounts. So I think we're going to come out in a good position for year end. Now, those were done a couple months ago, so we were going to have to update them and see if that still holds. We have just had our property values reassessed in the city. So for next year and the following 2 years, we're going to spread those increases over time. And as anybody who lives in the city of Annapolis knows, there were significant increases. And I'll be mentioning that in my presentation in a minute, but we're based on what the state has given me as far as our properties are concerned, we may see a 7% increase each year for the next 3 years, not including our new properties that are adding to the rolls. So that's good news for us. As far as I know, the threat to revenues does not include income taxes because the income tax projections are strong. And I haven't been following anything going on in the state. I guess I must not read the newspapers too much, but I don't see many of our revenue sources being threatened. So I have to know specifics. They've given us information on our, what do you call them? The gas, the money we get from the fuel taxes, the highway user revenues. And those look to be in line with what we're getting. So I'm not sure what if they're having problems with fund balances or what they're planning on their side.
Okay,
And we've never had more grants. We've got more grants than ever coming into the city. So I don't know to what you're referring as far as the state's budget woes.
all I know is that I read media sources talking about the hundreds of millions of dollars the state is projecting to be a shortfall in terms of revenues and looking for ways to expand, the revenue base to make up for that. So I haven't looked or haven't seen the extent to which, as you say, local government revenues or revenue distribution from the state are going to be affected. But I didn't know if you were aware, if you had any idea of how to deal with it. But what I hear you saying is business as usual. Things seem to be okay for the time being, but I'm sure you will keep your eye on it.
Yeah, every once in a while we'll get a surprise to say, we're holding this back. I know they changed the structure that they were sending their highway user fees a couple of years ago, but that's gotten back to normal. And the state is going to be enjoying the increase in the property tax assessments as well, because they have a small rate that they charge on that as well. So
it sounds like a lot of the state shortfall actually comes from sales tax, which actually doesn't then affect city so much.
Okay, thank you, Vicki. All right, well,
yeah, we don't get a share of the sales tax, so
right.
That may not impact us directly.
Okay, but I'm sure you will keep your eye on it and deal with it as appropriate in the budget preparation. Let the record reflect that Jim Cardillo joined us a couple minutes ago during this discussion. Jim, good morning. How are you?
Thank you. Good morning. My apologies for my lateness.
No problem at all. We're just going through Jody's report, and I was asking about the reported significant shortfall in revenues at the state level and whether and to what extent that might flow over to the city revenues.
Well, I understand that a portion of the state revenue shortfall has to do with income taxes. And I know that our income tax revenue is based on what the state projects we'll receive on a quarterly basis. So I was wondering the same question: is will it affect our allocation of income taxes from the state?
Well,
I
so,
may not know the answer to that, but,
yeah, I don't know if they're going to try to keep some back, but we get a share of what goes to the county. And I not sure what's causing that shortfall. It may be that they over budgeted what they thought they were going to get. But earned income, and what I can see is strong now. So I don't know what their issue is. If somebody just projected that it would be much higher than it is, and so they're having a shortfall there. But we get a certain percent of what's collected from the citizens of Annapolis.
From what I recall, when it comes to income taxes, the state tells us what our income tax revenue will be on a quarterly basis. And if the state was wrong on their state income projections, I would expect that the distribution to counties and cities would also be short.
I'll be glad to check into that, but ours is going to be a percentage of what's collected from our citizens, and the state distributes it. They determine the amounts that we get in distributions based on what they're collecting and processing, but they process what comes to us, and that's our share, and the share is set down in law, so they don't mess with our share. They do determine in what increments they give it to us, which we at the end of the year, they determine 3 major distribution payments to us, and that doesn't change, but there's a lot of delinquent filers and those kind of things that come in between those major payments, and those have never changed as far as I can see. I typically know what the amount's going to be, and I've never seen it reduced for any reason.
So it may not affect us in the long run because it's just like you said, a shortage of their projection, but the amount they collect may not necessarily affect the amount that we receive.
Yeah, so what I was saying is for their own budget, when they build their own budget, they make anticipations of what they're getting with revenue. And if that's just my assumption that could be what's the problem is they overestimated how much they were going to collect for their own purposes. But unless there's a major downturn in the economy where people's incomes were dropping, that should not impact what's coming to us unless the state decides they're in such a shortfall that they're going to not distribute something. And I suppose from a legal perspective, they can change the law if they want to. So yeah,
No, I agree with you.
I'm gonna have to look into that in particular for the state income taxes and what their issue is. And you know, if it's out there in the news as far as shortfalls and stuff, I'm not watching it. Vicky, I don't know if you've read anything.
A little bit. The most recent write down was related to declines in withholding on income tax, but the earlier write down that was much larger was related to sales tax. So that there was just another one smaller than the earlier one. So
thank you for the explanation, Vicky. I just want to raise the sensitivity on this, and I'm sure that you guys will keep your fingers on the pulse, so to speak, and make recommendations and adjustments as necessary, if necessary.
Absolutely. If we find out that something is happening, and the way the state's going to send us the funding that's ours, then we will compensate by trimming expenses or holding back on filling positions.
Okay, good. Thank you. Any other questions or comments on this issue? If not, thank you for the report, Jody. Vicky, anything from the city manager's office today?
nope. I know that the big topic of the day is the ACFR, so I'm not going to stand in the way of that.
Okay. Jim, anything on the audit committee?
No, sir. The last audit committee meeting was postponed due to lack of attendance.
Okay, thank you. All right, there was no unfinished business. New business, the audit, the CAFR. Jody, let me turn it over to you. And I know there's gonna be a big presentation next week for the finance committee, but we
Yeah.
appreciate you giving us a, advanced briefing. I hope that the, fact members have at least skimmed, the materials that were sent, and that may make, understanding Jody's presentation a little bit, easier, although it's pretty heavy stuff. But Jody, let me say, I skimmed it, all the various documents. Can't say I've read them in detail, but they looked pretty good. It appeared to be a relatively clean audit, and no issues between staff and the auditor, and so I'll turn it over to you and to Julie, whoever you deem appropriate to talk to us.
All right, I will ask Madeline to put the PowerPoint up. Actually, the next week's presentation, it will include the audit firm coming in to do the required communications. And the the finance committee wanted to have a presentation at their meeting, and so the audit committee is going to be as much as possible watching that presentation, or be present at the city chambers to see that and ask questions of the auditors. And this kind of gave me an opportunity to look in advance at the things we might want to talk about at that presentation as well. So it'll be a combination of the auditors and me giving some information about the financial statements and the audit results.
Jody, before you start, it's my understanding that if any member of the FAC want to attend that meeting of the finance committee on March 20th at 11 a.m. in the council chamber, they are welcome to do so.
And it's televised, so if you want to watch from where you're sitting, you can watch it, just that you won't have the opportunity to ask questions if you're not in the chambers.
Okay, sorry for interrupting.
No, that's okay.
Carry on.
All right, so I hope, I said earlier to the chairman that this was a late night effort, so hopefully we don't find any mistakes in here. I'm sure there's a typo somewhere. So Madeline, we go to the next slide, please. All right, so opening up a little bit about the audit. The audit's finished. We published the final financial statements at the middle part of February. And again, I want to give congratulations to Julie because she really carried the torch on this one this year. And I've been busy with other things as well, so she had to pick up more than she normally does, and did a very good job working with the auditors and getting the numbers into shape for the financial report. As you know, the ACFR annual comprehensive financial report is a big document, and it has lots of pieces that all kind of fit together and roll up from very detailed statements into more consolidated versions of the financial results. So it is a big effort. The auditors finished up with us in February. They have given us their letter of required communications. They have given us their independent report on the financial statements, and this is a clean opinion, as it has been for many, many, many years, all of them as far as I know. And we also had our single audit report, which is an audit of our federal award spending, and that includes a schedule of all of our federal awards that we've spent during the fiscal year. and they test major programs as necessary based on the size of the programs. They have to get to a certain threshold. And I believe, and Julie can correct me if I'm wrong, they only have one major program that they tested this year. It was the transportation's use of their ARPA monies. Correct, Julie? Yeah, so that was the one thing they tested, and transportation had a significant ARPA award to use for their transportation operation expenses. So that's what they used it for. They did testing there, and again, we had a clean opinion on that. And we also got a report on the internal controls, and that report is included this year within the single audit report. Sometimes that's issued separately, but I see this year that they connected it to the single audit report. And to note is that that report does not have any material weaknesses or reportable conditions. And so far, we haven't seen anything regarding a management letter. The management letter would usually come to us to give us recommendations on improvements to internal controls that did not meet the threshold of going in the other opinion. So that's good news too. And we're not sure we have anything coming there too. And Julie can correct me if I'm wrong, if they've said that they've got anything coming in a management letter.
No, they haven't said so.
All right. So that's good news too. That means Julie did a really good job. That's her gold star. So next slide. They in their auditor communication letter, the things that they talk about, no corrected or uncorrected misstatements, that we were cooperative and professional during the audit. There were no disagreements. They didn't have to consult with other accountants on how we applied our accounting principles. And there were no major issues between us, and they obtained a management representation letter from us. Next slide. The ACFR, as I said, is a very large document. It has 3 major sections. An introductory section, which has just some general information, and a transmittal letter that I put together that's more general in nature about what's happened during the year. Then we have the financial, hold on a second. I want to make sure I included everything. There's a list of officials. There's our award from the Government Finance Officers Association in that section. Trying to see where the MD&A is. I think that's in the financial section. Yeah, so the financial section is the most important section, and it includes the independent auditor's report, and then it starts in with our financial information. The first and foremost is the management discussion and analysis, which uses the information shown in the many financial statements that are provided and notes, highlights, dollar changes, important events that happened during the year. One of the things that the management discussion and analysis is supposed to do is not just tell you what went up and what went down, but tell you why, what events caused it to happen. So I would recommend that if you want to get an overview of what happened with us, that you would go through the management discussion and analysis first. The next section, can you go to the next slide? Yeah, so here, the financial section has government-wide financial statements, fund level financial statements, footnotes, required supplementary information. And then later on in the next section, there is some budgetary statements for the funds. As you can see, this is 3 levels of financial statements, which is one of the reasons why it's such an effort. During the year, we track everything on a budget basis and then have to pull together these auditable financial statements, both from a modified accrual basis, which is the fund level statements, and then the government-wide statements, which consolidate the operations of the city into 2 presentations, governmental activities, and business type activities, which are proprietary funds. The notes are also very helpful in trying to get some details on activity that happened during the year and breakouts of some of our balances, cash, investments, debt, tells you what happened in those areas during the year, and has some other required disclosures as to liabilities and risk that we carry. Next slide. So the unaudited section in the back of the financial section includes combining and individual fund statements, and this is where you'll find most of the budget statements. The budget versus actual tells you how each of our funds, individual funds, did compared with their legal budgets. And we also have presentations that combine all the individual funds that roll up into a combined column in the front section of the financial report. And so you'll see these combining statements for the fund types listed there: governmental, enterprise, internal service, and fiduciary funds. Next slide. The last section is the statistical section. It has some 10-year trends for financial purposes, for our revenue capacity, our debt capacity, some demographic and economic information, and some other operating information. Next slide. So with that document, it's a big one, but I do encourage you to take a look. And like I said, the management discussion and analysis and the footnotes are a good place to get more of the content and why, as opposed to just looking at the I went through the activities for the year and the balances and decided to pick out a few highlights. I just got a notice that my internet connection is unstable, so somebody flagged if I break up. Excuse me, hold on. All right. Government-wide net position, $19.5 million increase for our governmental activities and a $2.8 million for our business type activities. I'll remind you that business type includes the utility funds, water and sewer, watershed restoration, parking, and a refuse fund. And I think I got them all there. There's 6 of them. We had the fund balances in the general fund increased overall by $716,000. Our capital projects increased by $13.7 million. Carry fund balances, as I said, increased by $2.8 million. One of the main that happened during that fiscal year, as you all know, we had a public-private partnership with Medco and AM sell the debt for and construct the new Hillman garage. That most of that activity occurred during this fiscal year. And at the end, in June of 23, we opened the new Hillman garage, which resulted in a $30 million garage balance sheet. During and 22, which is early in the fiscal year, we purchased Cars Beach for $6.7 million. And after the garage opened, we refinanced the sub-debt related to the P3 and took on that sub-debt ourselves, issuing our own debt, which ended up had a significant savings in debt service for us. And one of the biggest highlights is that we were able to both use parts of our reserves, capital reserve fund, and our one-time reserves, but ended up replenishing those at the end of 23 with the results from 23. And we still, at the end of 23, have unspent ARPA funds of $6.7 million. I don't know if anybody has questions, you can raise your hand. I can't see everybody, so let me know if you have questions along the way. Jim?
Thanks. Two quick questions. With regards to the fixed assets addition for the Hillman Garage, the asset side is a $30 million addition.
Mhm.
The new debt is 8.7, but there is a existing debt on the garage construction, right?
No, all the debt for the garage construction, oh, that was all Medco debt. That's what you're referring to. Medco issued senior bonds and Medco still holds those bonds. Those are not considered to be city debt.
Okay, so that's not it.
Yeah.
So really the net of I'm just looking for what's the net asset of the Hillman Garage. Is it the 30 million less only the 8.7 million addition?
Yes,
debt?
but consider that although the debt's not on our books, they get first dibs on all of the garage revenues and the revenues from the downtown
I
park.
understand the waterfall, yeah. But
Yeah,
just in
so,
terms of the net asset of the
Yeah.
garage. Okay. And
yeah,
then second, thanks. And then second was the unspent ARPA funds of 6.7.
mhm.
Is do we still have identifiable ways to spend it?
Yes, we do, and if we may need some of it this year. We had in the budget process last year, there were a few amendments to the budget that the council successfully passed that tapped some of those ARPA funds for particular purposes. That wasn't a significant amount, so there should be a bit of this left. And it's unclear yet if we're going to need it to help transportation for this fiscal year. They still have a little bit left in their CARES and ARPA monies, but just a little bit of the ARPA. They have more CARES left, if I'm not mistaken, Julie. If they've got, I don't know if you know the numbers off the top of your head. It was just a couple $100,000 left from their ARPA monies, but you know, if they need extra funds to get them through the year, we'll have to help them. I don't anticipate having to use any of that for operations in 24, but yeah, we're now talking and building the budget, talking about what we can use the resulting funds for. There will be a lot discussed during the budget process. We have to get the funds committed by the end of December. And then we have a couple of years past that to actually expend the funds. So, you know, the cash will be around for a year or so, but we have to get it committed to purposes pretty quickly.
Thank you, Jody.
Okay. Any other questions right now? I'll move on. Next slide. I just gave you a little summary of the general fund balance reserves. In 22, if you you looked at those reserves, the capital reserve fund had $8.3 million. We used some of that in 23. We had 3.87 after the uses, but we added a new layer there. So anyways, I'm trying to see if that math works, and it doesn't look like it works off the top of my head. So, but it did end up at $7.78 million. The budget stabilization fund, we added some to that. As you know, that's a calculation that has to be filled up to its maximum level. And we needed to add a little bit to that reserve this year. And on the assign the reserve for one-time uses, again, we used some of what we had in 22 and then we added back to it at the end of 23. I'm not sure about 24. If we add back to the reserves, it won't be as much as we have in the past couple of years. Next slide. All right, on the general fund budget, our budgetary statements are showing that our revenues exceeded budget by 2.3 million. That's relatively close couple, 2% about. And most of that was driven by interest income. As you know, the rates were going up for those borrowing, but we were also earning a lot more on our cash balances. And when we opened up the 23 budget, we did not anticipate the extra interest income. And we have 2.3 million in excess of what we budgeted. And the income taxes exceeded our budget expectations by 2.3 million. So anyways, I'm reading those numbers wrong. So overall, it was a $2.3 million increase, and the causes are given there as those two factors. There were some revenue sources that were less than budget and others that were higher than budget, but this is the main driver of the increase. On the general fund expenditure side, we underspent by a significant amount, as you see. Most of that is in public safety, and most of it, like $3.5 million was police. And that's just a result of their not being able to fill their positions that they have funded. So they're still having a hiring issue, although recently I have heard that they're hiring a lot of new officers. So that may correct itself in 24 and 25. Next slide. On the debt side for the year, we had our normal bond issue, 34.425 million in our Series A. Some of that went to City Dock. And then, as I talked about before, we had some debt that we issued to refund the sub debt. The City Dock project, there were a lot of bonds allocated to that, and we may end up redistributing those for other purposes since they're the project hasn't moved forward as far as construction yet, and we're not sure when the construction is going to start. We're hoping by next fall. On the leases, and I call them SUBITAs, and Julie, you may have to help me with the acronym. My subscription-based information technology. Okay, agreements. We've had 2 accounting standards in FY22 and then FY23 that requires us to show some of our longer term leases and longer term subscription based agreements as long-term liabilities. So you will see those balances and entries within the financial statements. And in the pension and OPEB liabilities, 23 saw growth in the markets, which is good for our pension and OPEB funds. We had 11.4 million and 2.1 million growth in our police and fire pension and OPEB trusts. And then I have some statistics here about the net pension liability for police and fire grew from 65.4 to 68.7. But the funding ratio actually went up slightly. On the OPEB side, we're making progress there. The liability went from 34.9 million to 26.8 million. And the funding ratio went from 25 to 31.6. As you know, we a few years ago changed the way that's structured, and only public safety can enter the OPEB plan, and that's an option that they exercise when they come on board. And others that were in it at the time were able to grandfather into the plan, but non-public safety employees are no longer allowed to get into the OPEB plan. So, and that coupled with our continual funding of the trust, in not only current employee contributions and the employer contributions, but we put a few $100,000 in every year just to address the past liability. So that's, you can see that's growing there. And we'll grow it to a point where we think the trust assets are adequate enough to start paying retiree healthcare costs out of the trust. On the state side, our other non-public safety are in the state pension plan. And that's a year behind. So when you're seeing that, you're looking at their FY 21 compared to FY 22. They had a net pension liability 20.4 that grew to 26.7. That's our share of the liability. And the funding ratio went from 81.84 to 76. And that's because, as you know, at the end of 22, the markets were dropping. So we're seeing that in those amounts. So it's a year behind. Next slide. On the parking and transportation side, despite the Hillman closure, the fund had a slight increase to its net position and still was able to fund the full subsidy to the transportation fund. As you know, the year before, 2021, 22, there were some strains on that because of COVID and the lack of the parking funds, and we had to cut back on the subsidy to the transportation fund. So, but we were able to do the full subsidy in 23. And it's looking fairly good this year as well. On the transportation side, their net position actually increased by 500,000. And they've carried a deficit balance for a while, and they're whittling their way out of that. It's about 500,000 deficit now, which has been decreasing over the past few years. Next slide. For the internal service fund sides, here's a challenge that we have. At the end of 23, we took a careful look at all of the claims liabilities and increased many of them. I don't know how much of this is publicized, but there's been some claims filed against the city, and even if we expect a good outcome, they're still expensive to defend. And if there's any detailed questions on that, I'll let Mike Lyles address that. But what happened with that, the actuary used our claims estimates, our liability estimates, to make a recommendation to what we needed to record in the financial statements. And FY23 this fund ended up with a significant deficit. And so when they do their future reports, they're going to start recommending the higher levels of contributions. And where I'm even considering trying to locate some funding to do a contribution this year, but we haven't decided yet if we're going to do it this year or wait until the next budget year. And anything I do there would have to go to council as well. But I'd like to try to make that as small as possible. Set some cash aside over there. On the health insurance fund, as you know, over the past 3 or 4 years, we've been offering premium holidays because that fund's balance is limited as to how much we can accumulate there. And in each case, as we finish a fiscal year, that following spring, we were offering a holiday for the premiums where neither the city or the employees had to put in the premiums. And each year that we did this, the premium holidays got smaller. And for 23, the fund balance in the health insurance fund is right on where it should be for the allowable reserve. So there will not be any premium holiday this spring. And we may see a slight cost increase in our premiums this next year, but it's the first time we've had to increase premiums in several years. Any questions there? Okay, we can go to the next slide. And so talking about 24 and beyond, I just wanted to list some of our challenges here. We've had a good year this year so far. We've had some improvements in the revenue streams, and we've controlled expenditures. I believe we're going to have a slight addition to our reserves at the end of the year, though not as much as we've had in the past. We're going to have, like I just discussed, we're going to have to make some additional contributions to the self-insurance fund. We're working on our union negotiations now for 25 and 26. What we're trying to do is a 2-year agreement, which will finish out the term of the mayor. And, we have hopes that, we're working at it. I can't be too detailed on what we're doing, but, we're being very hopeful there. The Hillman Garage opened. Medco and AMRP are now collecting the revenues and sending it to us through their waterfall payment. I have my concerns there is that I have limited experience. We've only gotten one payment so far. The payments come every 6 months. And the payment related to the waterfall was just over $2 million. Hopefully that will keep up at that pace. So I look forward to seeing that revenue coming in so we can judge better on how the parking fund is going to fare over time. And I want to be able to monitor the revenues for these tax increases, to keep pace with the budgeted expenditures. With these really significant increases to assessed value, you could expect that property tax abatement activity may increase. People would more likely have incentive to challenge their assessed value increase. So we'll see what that does, if that ends up in a higher level of abatement activity or not. And then the last challenge that we have coming up is the positive fund balances and the ARPA funding. We have to make a careful consideration of our options. I'm sure there'll be requests to that end on what we can use it for, and we'll have to weigh those requests. So that's the end, I believe. Madeline, that's the last slide, right?
Yes, it appears that way.
Okay. So, questions? Vicky, I don't know if you want to add anything, Julie.
Nope,
Jody, oh,
no, go
I
ahead.
had a question. How come the self-insurance fund doubled? Was there some type of event that caused that?
I'm going to ask they're not type of event. There were, during the year, we were in, I don't know what you call it, Mike, served some lawsuits for liability claims. And in many cases, we're confident of success, but there are claims that are going to take a while to defend. And within those reserves that we set are the costs of defending the claims. So I'll let Mike speak to that.
There was a question there?
Yeah, what caused the increase in the self-insurance fund claims liability? As much as you can explain it, because some of it's confidential.
Yeah, we have several cases that two in particular right now that are federal cases that one is a class action, one is a wrongful death, that in our view should be estimated based on a potential loss or settlement in the multi-million-dollar range. Not that we plan on losing that case, but in the way that we adjust the self-insurance fund is based on really two things. One, the amount of money we think we need to defend the case up to trial. And if we were to lose or settle the case in that instance later in the case, what do we think the potential downside for the city is? And so we take a very conservative view, meaning we put that amount at what we think is the highest the city might have to pay out. But those cases are really outliers for us. There's really no way to adequately estimate these cases because in my impression, these cases are really first impression kind of cases. They've never been brought before against a municipality. They're really kind of strange and odd cases for the kinds of claims that they make. So conservatively, we probably put the amount of money that would be paid out by the city at a very high level, knowing that we do have an excess policy over and above a certain amount. And but oddly enough, the cases have claims that might not be covered by our excess. There is also a case that we were dismissed out of, which was a wrongful death that had a potential claim downside in the $1 million range. And we put sufficient funds to cover that, as well as the cost of defending that case. We're not sure if that case will come back. It was dismissed without prejudice. But if it comes back, it's a serious case against the city, and we would expend significant resources to defend that claim. We think we would be successful. But again, conservatively speaking, we put higher reserve amount estimates in for a potential downside or loss, as well as the amount of money to defend that case. So that's 3 cases. One was dismissed, but the self-insurance increases were related to that case before it got dismissed. And if any potential case, if it comes back, which it could, before the statute of limitations runs, we would be back into defending that case. We did take one loss on a case which was unusual, it was an outlier, and it was a 6-figure loss. Our damages are capped at $400,000. The case ended up resolving for about $300,000 after some Court of Appeal decisions against the city. And that's basically it.
Thank you, Michael.
I think Jim has a question.
Thanks, Jody. 2 questions. One on the self-insured fund for health insurance. You mentioned there was a successful depletion with the premium holidays. Should we have a reserve for incurred but not reported claims? I mean,
So for health insurance fund, yes, we normally would, but health insurance, we are self-insured, so we're paying those claims out as they come. There isn't much incurred but not reported on the health insurance. By the time we issue these financial statements, we've already incurred all of our FY 23 expenses. It's not like with those other liability claims that we were just talking about that can drag out for years. Health insurance claims are pretty immediate as far as getting the bills from the hospitals, et cetera. So that doesn't carry a big IBNR. And what you have on the balance sheet as accrued payables is typically the run out, is what they call it, the run out of claims into the next year.
Okay, so it's designed not to carry an excess, a large reserve.
It covers 10, we're supposed to keep 10% of our annual expenses. So I calculate 10% of the next year's budget. I keep that there and distribute the rest of it proportionally in a premium holiday. And like I said, since we haven't increased premiums and we've been very successful in our costs, we've been able to do the premium several years, the premium holiday several years, but it's depleting, as you can imagine, because costs are inching upward and the expenses are increasing overall.
And Jody, the workers' comp claims come out of self-insurance, right?
Mm-hmm. Yes.
Just to make everyone aware, we've got 2 bills at the state level that, in my view, would expand the amount of money we would have to pay out. One is a bill that would make long COVID something that someone could claim as a work-related issue. And there's another one that escapes me now, but the 2 bills would expand what would be covered under workers' comp. We think those bills are bad bills for the municipalities across the state, including the city. And there's a potential downside there as well that we would have to cover, because we can see those claims exploding, in my view.
Thanks, Jody.
Vicky has some exposure to those state laws.
Yeah,
too.
the other one is sorry.
I think it's like
Adding some additional types of cancers to
Yes.
the list.
Yes.
And adding PTSD actually to the list of things that are assumed to be work related for workers' comp purposes.
mostly for the public safety group. It's a lot of it centers around public safety, cancer risk for firefighters and PTSD for both.
Yeah.
Firefighters and police officers. So it adds to the presumption of risk for those ailments and could cost more on the workers' comp claim side.
Thanks. And then my last question was with regards to your challenges for the upcoming year. You mentioned the Hillman Garage revenues, and you said it's just too early to tell. But I'm pretty sure that Medco had projections as
did.
to what and are we ahead, behind, or at projections?
In the first 6-month payment that I received, the revenues that came in were more, but the city had also asked the parking operator to do extra things at the garage, which kind of offset that. So the amount of revenue that came in was about what we had anticipated in that model. The model goes out 30 years and includes some assumed price increases. There's a lot of variables there that the city will have a final say on price increases. So that could change and we'll have to see. I haven't seen a complete breakdown of that payment and how it compared to each element of the model as far as the money coming in and the money going out. I don't have that yet.
Thank you then. Thank you.
Other questions, comments from FAC members? Jody, again, congratulations to you and Julie and your teams. And thank you very, very much for a very good, summary report. It's more than I was expecting, but very, very much appreciated. So thank you very much.
Always love to entertain. So as you're looking through the documents, if you have other questions, feel free to send me an email and I'll answer them, or Julie will answer them as best we can. There's a lot of information to look at.
Okay, good. Again, Julie, you too. Congratulations. Good job. All right.
Thank you.
Anything else for the good of the order today? Next meeting, regular meeting, April 11th, 8 a.m. Seeing nothing, I'll entertain a motion to adjourn. Made by
So move.
Frank Brown, seconded by
Second by me.
Dillo. All in favor, signify by saying by raising your right hand.
Aye.
Be unanimous. So everybody have a great day, and again, thanks to everybody. Be
Yes,
well.
thank you.
Thank you.
Happy St. Patrick's Day.